Perfect. Besma, next slide, please. So as a settler of these lands, I would like to begin by reflecting and acknowledging the land that I am on today. As we gather on a platform with Sheridan Edge, I would like us to also acknowledge the traditional territories of the Indigenous nations that we are currently occupying, which is the Anishinaabe, the Haudenosaunee Confederacy, the Wendat, the Métis, and the Mississaugas of the Credit First Nation. Specifically for me, I sit on the Haudenosaunee Confederacy, and I would like to express my utmost gratitude and honor to be here on this wonderful land where I'm able to call it my home. Not only has this land provided so much for me, but for those before me, my loved ones now, and will be continuously providing even for those that are still yet to come. I can't speak for everyone here, but with this busy life of go, 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 I often find myself taking the land underneath me for granted and how much life it provides for me and how much we take from it. So before this session, I would like us all to take a moment to reflect on a piece of the land that is underneath you and express your gratitude for what it has given you today. It could be the trees, where it gives you the oxygen you breathe. Maybe it's a body of water that's near you, or maybe it's the physical land itself that keeps you grounded. Whatever you choose, please take this moment to reflect on the land you are on and how much you are grateful for it. And with this moment of reflection, I would like to thank all of you for taking this moment to acknowledge the land. And I hope you continue to reflect on it even further in the future. That's my next slide, please. So Edge is Sheridan College's entrepreneurship hub. We are a vibrant community of people from all backgrounds and walks of life who believe entrepreneurship can make lasting changes in society. We support change makers as they explore entrepreneurial approaches to creating a more equitable and sustainable world. Next slide, please. At Sheridan Edge, we help founders grow ideas and ventures that support a triple bottom line approach. So profit refers to a venture's creation of material wealth, including financial income and assets. People refers to the quality of people's lives, such as the equity between people, community, and nations. And planet is about protection and conservation of the natural environment, such as tackling climate change and environmental sustainability. We also offer mentorship, learning programs, inclusive community, and we have co-working spaces within 2 of the campuses of Mississauga campus and the Brampton campus. And we offer opportunities to funding for you and your venture. We also connect Sheridan students to opportunities to learn and work with startups, and we collaborate with community partners to support impact entrepreneurs in the region. Something that is coming soon in the fall 2022, we have an exciting membership model coming online. And if you're looking to belong to the community of change makers and inspiring entrepreneurs, attend virtual events like these and in-person events to help grow your network and skills, solve your startup challenges with your peers, and access Edge staff advisors. It's going to be super easy to plug into what Edge has to offer. The co-working space in downtown Mississauga Sheridan College campus will offer the flexible co-working packages. And Sheridan students, you'll be able to access our community membership absolutely free. And this will allow you exclusive access to online learning modules and so forth. I'm gonna enter into the chat if you wanted to learn more, but please do consider joining our newsletter. Next slide, please. So today's session is part of a great series with the Social Impact Catalyst series powered by RBC Future Launch. So if you like today's session, please consider joining our other sessions the next couple of weeks. So if you have entrepreneurial ideas to mitigate climate change, grant writing, tips for startups with Nora Sharab, and leverage grant funding for your startup with Pocketed. So please do consider joining those events. And I will also share a link in the chat for registering for those sessions. Besma, next slide, please. And I believe, Besma, you're going to take it from here.
Yes, give me 1 second.
Sure.
Are we good? Oh, you're on mute. That's what I think we're okay to go, right? I'm gonna start.
There we go. Okay, sorry folks. Again, like it's you think you have enough screens with two, and then you realize you don't. Anyways, pleasure to have you all with us, and pleasure to have Derek and Gina with us today. So my name is Besma. I am one of the staff at Sheridan Edge, and we're excited to have you all join this session with Owner and Gina and Derek. So just to briefly introduce both of them. So Derek is a former lawyer and entrepreneur who brings both business and legal lenses into the presentation. Derek is one of the former founders of Founded, a legal technology platform built for entrepreneurs, which was acquired by Owner and RBC Ventures company in fall 2020. So great to have you with us, Derek. And Gina Peretti, and hopefully I pronounced that right, is an account specialist at Owner, specializing in helping aspiring Canadian entrepreneurs launch their business properly. Gina's experience as a founder herself allows her to provide seasoned and timely advice to new business owners. Her genuine interest in the startup landscape of Canada is a true asset to both Owner and the entrepreneurs they serve. So great to have you both, and we'll pass on the virtual mic to you and the screen from here.
Wonderful. What a wonderful introduction. What a wonderful land acknowledgement. And we're really excited to be here today. So I'm just going to get set up with a few things as well. Maybe a few housekeeping items. Let me share my screen first. Everyone see my screen okay? We're good. Awesome. Okay. Just bear with me here. Just want to make sure the chat is set up correctly. Okay, so we are thrilled to be here. Gina and I are, as was mentioned, part of the Owner team, and we talk to quite literally hundreds of entrepreneurs every single day, all of them kind of creating their dreams like yourselves. In terms of logistics for this evening, we have some great content to go through. We're going to focus in on business structures and then like the real basics of like how to start your business. We'll then move on to a few other things like intellectual property and some business operation items. Don't worry if we don't hit everything. It's quite common that we don't hit all the content in these sessions. I do believe that the slide deck has already been provided to all of you, or maybe will be in the future. So don't fret in that regard. And I think the last thing to suggest is if you have questions, just put them in the chat. Both Gina and I will keep the chat open, and we'll answer the questions as it's appropriate kind of throughout the content. What I don't like doing is waiting to the end and doing questions there. So if you have a question about incorporation or how to structure something, ask it when we're talking about it, and we'll do our best to answer it during that time. And don't be timid about asking questions. If you have a question, I'm sure someone else has the exact same question. I think the other thing to just highlight is we have a wonderful group today. I lost track of how many. We're at almost 50 now, which is wonderful. And I know that this session was sold out. And I think we have another session coming up shortly. So you can tell your friends if you enjoy it, and you can tell no one if you don't. So either way it works. So let's get kicked off here. I'm not going to go through intros because we already went through it. So let's start with business structures. This is the best place to start. Okay, so in Canada, we've got basically 3 business structures that I'll say 90% of all businesses will fall under. The one what are those? Sole proprietorships, partnerships, and corporations. We're going to go in kind of a little bit more detail about what each of those are in a second. The one that I think is missing that I just want to kind of put a pin in is nonprofits. And the reason we don't talk about nonprofits in detail here is one, we don't like assist at all with nonprofits on owner. But two, if you are considering a nonprofit, this is the one area where we would highly recommend you work with a lawyer. And the reason it's really important to work with a lawyer if you're doing a nonprofit is oftentimes when you're looking to pursue a nonprofit, one of the ancillary benefits is getting charitable status so that you can accept donations and things like that and provide tax receipts. The difficulty is you kind of only have a certain number of attempts at getting charitable status. And if you try, let's say one time, you write what your mission is and they reject it, oftentimes if you just try rewording everything, it won't be accepted because they think you're just trying to massage what you're doing to fit in the charitable status bucket. So it really is something that's important where I'd suggest work with a lawyer. It's money well spent to kind of pursue that path. The other thing I'm happy to talk about as we get into the incorporation section is just social enterprises generally. And I think it's worth highlighting, especially because this is part of Sheridan Edge, that just because you are a for-profit corporation doesn't mean you don't have social impact. You can pursue a for-profit business with complete mindfulness as it relates to the earth and a broader stakeholder network and not just pursuing shareholder wealth. Okay, so there are some options as it relates to that. But that's a good caveat. And let's kind of kick this off now with sole proprietorships. I try to make it as basic possible because I think this is a pillar of understanding entrepreneurship in Canada generally. And a lot of the stuff we're going to talk about taxes, we're going to talk about liability, everything stems from business structures. And this isn't just me putting I'm a former lawyer hat on. I really think it's important to understand. So kicking it off, sole proprietorship. If anyone here has already started your business, and if you have not done anything in terms of registrations and you've sold something, you are already a sole proprietor. You didn't have to do anything. Just by virtue of you selling your first thing makes you a sole proprietor. So I like to give examples. Let's say I'm starting a sunglasses company and I'm selling sunglasses. So and I sell my first set of sunglasses to one of you. What does that mean? Okay. Right off the bat, I'm a sole proprietor. What does it mean kind of logistically? Well, I made some money as pursuant to that business transaction. So I would put that on my personal income taxes as like self-employment income. Okay. So there's no magic to sole proprietorships. It is quite literally you selling something, and that's the business. There's no magic behind it. There's no registrations you need to do. Okay. And that kind of highlights the benefits of a sole proprietorship. It's super simple. You don't have to register anything. You don't have to do anything special with respect to taxes. Start your business, you're on your way. Now, there is a registration that can take place, and that would happen where, let's say I start selling a bunch of glasses and I don't want to call my store Derek Hoffner, which is just me selling glasses. But let's say I want to call it Derek Spectacular Glasses, okay? If that's my store name, I can then go ahead and register a trade name, which is sometimes often also considered registering a sole proprietorship. And just registering Derek Spectacular Glasses to me personally is that business trade name registration. It doesn't really offer any protection, but it kind of tells the world, if you're buying from, let's call it, Spectacular Glasses. If you're buying from the store called Spectacular Glasses, that is operated by Derek Hoffner. Okay. So simple, ready to go. No separate taxes required. The thing to keep in mind around tax time is all profits and losses go to you. So sometimes some people, if they're pursuing a sole proprietorship and they have losses, but they also have employment income coming in, they can reduce their employment income in terms of taxable income because they have losses stemming from their sole proprietorship. Okay. So all these wonderful things about sole proprietorships, why doesn't everyone do it? Why do you make things complicated? Well, I think the big thing here is you have to keep in mind when it comes to sole proprietorships, you and the business are one and the same. There's no distinction between the two whatsoever. So if something bad happens to the business and someone puts these glasses on and gets an allergic reaction and sues the business, it isn't just my business assets that are at issue, it's my personal assets. So they can go and take, if the lawsuit's successful, my computer, my savings in my bank account, if I own a house, my house, a car, anything is up for grabs because again, your business life and your personal life are one and the same. So that is the main takeaway here. The other thing is because your business life and your personal life are one and the same, you have no kind of business continuity options. If you decide to shut down the business, you can't sell it because it's it's intimately tied to you personally. Okay. We're all experts at sole proprietorships now. As I mentioned, if you have questions, throw them in the chat, but we will keep on going with partnerships now. So we understand sole proprietorships. What's the difference with partnerships? Well, the difference is now, rather than me selling glasses, it's Gina and myself, and we're selling glasses together. And we're going to have a way better name than Spectacular Glasses. I don't know what it is, but now we get to kind of pool resources together, and we both get to sell glasses, and we're doing our thing, and it's great. But everything else that I just mentioned about sole proprietorships is kind of identical to a partnership example, other than the fact that sole proprietorships have to be one person and partnerships have to be two or more. But other than that, it's pretty much the same. Okay, there's really not any registrations that are required other than you're even more likely to do the trade name registration here in terms of your name, because just putting two names together is a little bit awkward. So you'll find a name and you'll register it. I should have mentioned, but I didn't, but we obviously can help you at owner to register your sole proprietorships. And again, taxes are super simple. I'm going to file my own personal taxes. Gina's going to file her own personal taxes. There's no issue with that. You will maybe need like a partnership agreement to kind of figure out, how much money do I get? How much money does Gina get? Are you splitting it 50-50 and keeping it simple? But other than that, it's super simple, right? And the downsides that exist with a sole proprietorship also exist with a partnership. So number one, your business life and your personal life are one and the same. If something bad happens to your business life, your personal life can be affected. There's no protection, okay? Two, I already mentioned the partnership agreement. I'm seeing a question from Zara in terms of why can't you sell the business? And the same question exists for partnerships. You can't sell a partnership and you can't sell a sole proprietorship as an entity because they are you. When you are running a sole proprietorship and when you are running a partnership, you are just operating a business as you. You have nothing to sell. There's no separate business legal entity that someone else can purchase from you. Maybe they can purchase, like, maybe Gina and I work a whole bunch and we get like a distribution agreement with our special glasses with Sport Chek. I don't know. And we sell our special sunglasses through Sport Chek. Well, we could hypothetically sell the contract to someone else, but you can't sell the underlying business. Okay, so I hope that helps, Zara, with your question there. The other thing that I want to mention that's unique with partnerships And I mention it every time because it actually happened in Toronto and Kensington, but I'll give a good example. Again, Gina and I are starting the sunglasses company. Things are going really well. Let's say we've created, a bunch of value where like this business is, generating, let's say $100,000 in profit a year, $200,000 in profit. Wonderful. Now, unfortunately, I didn't tell Gina about my past financial history. And I actually used to run a sole proprietorship where I ended up owing the bank $100,000 and I never paid them back. Okay, well, what can happen in a partnership is the bank, if they find out that I have now created this new valuable asset, which is the partnership, the bank can come in and take it to satisfy the prior debt. Again, it's because you didn't create anything new. There's just a direct flow through me. And even if this business that Gina and I created is only worth $100,000 and the amount owing to the bank is $100,000, the bank can come and take it all. Because when you run a partnership, I own 100% of it and Gina owns 100% of it. It's kind of like a weird situation here. Right? So, partnerships are sometimes good to start, but if the business ends up being something a little more serious, we often see people move to an incorporation relatively quickly. Okay. So, great. Sole proprietorships we get, partnerships we get. Now we get to the creme de la creme of business structures in Canada, which is the corporation. So the one thing that is immediately different with a corporation is a corporation, to get a little bit historical, is a legal fiction. A corporation is something where the world creates it or accepts it as being a new person in the eyes of the law. Okay, so when you incorporate a company, you are quite literally creating something new that didn't exist yesterday. And I think you can even take it one step further, because when you incorporate a company, one of the things you get back is a certificate of incorporation, which, I don't know, kind of mimics a birth certificate, right? You've created this thing that didn't exist the day before. So now that you have this new thing, that new thing is where you operate the business out of. And all of a sudden, because you've created this new thing, the issue that you had with a sole proprietorship and partnership, where your business life and your personal life were one and the same, because you've incorporated, you can separate those two now, and they're distinct entities. So if something bad happens to the corporation, you're safe, personally. Now, if there's a whole bunch of money in the business bank account, that's still at issue, but no longer can they go through and grab your car, your computer, your savings, etc. Okay? So that is the main benefit of a corporation, and all other benefits stem from that core understanding. Corporation means separate business entity, means liability protection. Okay, so what comes from that now? Now that we understand that a corporation is different, separate legal entity, what are the benefits that flow from there? Well, the first thing, the issue we had with sole proprietorships and partnerships is they're one and the same and you can't sell anything. With a corporation, I can sell units of the corporation, units of ownership, to other people. Or I could sell the whole thing to someone else because it's the separate legal thing. Okay, there's tax advantages. We're going to get into it. And there's the idea now all of a sudden where the corporation can continually exist in perpetuity. Again, because it's not intimately tied to you or your partner in the business sense here. Okay. So again, like there's all these benefits of a corporation. Why doesn't everyone do a corporation? Well, first of all, there's a cost involved. I think the thing to realize is quite literally the cost to incorporate has decreased, I think, by approximately 2/3 since I practiced law. So I practiced law for about 7 or 8 years. When I used to practice law, people asked me to incorporate, would charge about $1,500 for it. Okay. Now with a service like Owner, you can incorporate with all of your fees and all of the legal documents for $500. And we've got a discount code at the end of this presentation. And you're going to get $300 back if you open up an RBC Bank account. So like the cost is no longer a hurdle, in my opinion, to pursuing a corporation. There are two other things to keep in mind though, and I make this because I want everyone to understand completely what they're getting into, because you have now created this new thing. And the new thing now requires its own tax return. Okay, so you are no longer relying on your personal income tax return. And when you incorporate, it has its own tax return. And unless you're an accountant, you are probably going to need to hire someone to complete that corporate tax return for you. Well, Derek, what are the costs? The costs are generally, I'd say, if it's a really simple corporation, you know, something as low as maybe $1,000, maybe a little less than that per year, upwards of, you know, if you're running a company with 10 employees or 15 employees, to do your bookkeeping and accounting, you know, for the year is probably somewhere between $5,000 and $7,000. Okay, so be aware of that, you know, it's an obligation that you're going to have going forward, just by virtue of incorporating. Second thing to keep in mind is, because you've created this new corporation, you have to keep it compliant in the eyes of the government year after year. And that is a minimal amount of work, but it still is some work. So there's an annual legal return to file, which is completely different than your tax return. And there's some accompanying resolutions. And resolutions are kind of like, you know, little like statements on paper where the corporation essentially states what happened over the previous year, and then the people that are involved with the corporation sign off on it. It's like a one-pager, it's pretty minimal, but still needs to get done. So we've just now learned basically corporate law, like first-year corporate law in law school. So if anyone's interested in going to law school, you're ready to go. Should be, won't be any tests at the end of today, but that's basically it, okay, in terms of the three business structures. Now, where I wanted to kind of tie in with Sheridan Edge is around social impact, social entrepreneurship, okay? So we already mentioned nonprofits or not-for-profits at the beginning. That's a separate legal entity that is not, you can have like a not-for-profit corporation. It's a different incorporation process. Now, if you wanted to pursue a social enterprise, the natural way to do it would be to incorporate a company and to just make sure that you're pursuing your business with you know, the social impact that you want to achieve. Okay, so there's not any necessarily magic on the legal side of things. It's more of how you operate the business going forward. There are different accreditations that you can get. The major one is a B Corporation accreditation, which is out of a nonprofit in New York. And there's a little bit, like a tiny bit of extra legal work that's required, and we could help you at Owner if you're looking to do that with no additional charge. But the big hurdle there is it's like you have to get audited at like usually year three to year 5. And it's typically if you've grown to like a 50-person company or 20-person company, then you would pursue something like a B Corporation certification. Okay. We have a couple great questions coming in, and I want to make sure we hit them before we go to the next slide. So, are partnerships difficult to dissolve when it comes to the point to end it? No, they're really easy to dissolve because there's not really anything to dissolve in a partnership. Again, it's just two people working together. Okay, so not too much to worry about there. You sometimes could If you've registered a trade name, you can contact the government registry that it's no longer being used. But other than that, it's super simple. Stephanie, if you are personally sued, nothing to do with the business corporation, will it impact the corporation? Will the corporation have to pay the lawsuit? Stephanie, wonderful question. And the quick answer is no. Okay. You won't, or I shouldn't say, this can actually get quite, this is the question that you get in your law exam after you've learned what we just learned today. So the short answer is it depends. It depends. Like, if you want to think of it, if you're personally sued, the corporation isn't yours. You just own units of ownership of the corporation. That's how you get the separation between the two. And if you're sued, one of the things you own are shares in this corporation. So let's say if you went bankrupt, the shares could be something that your creditors could have access to unless the corporation has a shareholders agreement where you can give it to another shareholder and things like that. So a little bit complicated, but there is a separation very distinctly between you personally and your corporation, which is a different entity. Adele has a great question. Are corporations registered in Canada somehow different than in the US? Yes, absolutely. So there's a couple really unique things. So one of the questions we get at Owner really often is, hey, I want to incorporate an LLC. Anyone know what an LLC is? Or, hey, I want to incorporate a C Corp or an S Corp. Well, these are all US corporations. We do not have any of those in Canada. Okay. In the US, you have C Corps, you have S Corps, you have LLCs. All of them have different tax implications and structural implications and all the rest. In Canada, we have one, a corporation. Okay. So it keeps it kind of simple. Now, a wonderful second question to that is the one that Daniel just asked, which is what is the difference between a federal and a provincial corporation? So another difference between the US and Canada is in the US, you can only register corporations at the state level. You get a Delaware corporation, or you get a Wyoming corporation, or a California corporation, and that's it. In Canada, we're weird, where you can register an Ontario corporation, or you can register a federal corporation. Now, I can't emphasize enough the differences between a provincial and a federal corporation. For everyone on this call, it will not make a difference. So you cannot make a mistake by choosing one over the other. So I want to put that as the caveat for everyone to understand. There is no right corporation for your type of business. Any industry can operate under a federal corporation or a provincial corporation, other than industries that you all are not doing, like maybe insurance. Like, no one's starting an insurance company because you're going to need $200 million of assets to back the insurance company. Okay, so understand that, but I'm going to explain what the differences are. Number one, a federal corporation, your name is registered throughout Canada. A provincial corporation, your name is just registered in the province you register in. Number one. Number two, there's a price difference. In Ontario, a federal corporation is $100 cheaper. In every other jurisdiction in Canada, a federal corporation is quite a bit more. Ontario is weird like that. And three, a federal corporation sort of has two levels of registration. You register at the federal level, and then you have to do what's called an extra provincial registration in the province you're operating in. At Owner, we take care of both like that, so you won't even notice it. Whereas a provincial corporation, you just have the one layer of government that you're working with, but really you won't notice the difference between the two. So those are the only differences, but just know that you can't make a wrong choice. There's just a bit of a cost difference and a bit of a difference around name registrations. So I'm going to wait 5 seconds for someone to ask the question, what I think should be the next obvious question. And then if no one asks it, I'm just going to switch the slide. Okay. Well, Derek, well, when is the right time to incorporate? Well, thanks for asking. There's two main reasons that you want to think about incorporating. Okay, so like I think generally some people are like, if like conceptually, if I'm really serious about my business and it's going well, I'm going to incorporate. That's like very high level. But there's two main drivers that you're going to look to in terms of deciding whether or not incorporation is right for you. Okay. First is liability, and the second is taxes. And they're both really important to understand. I'm just going to finish off one question here. Steve's has a question: which is recommended between a federal and a provincial? I recommend neither. It doesn't matter. Okay, so you're safe. Keeps it easy. Liability. Let's touch on this now. So liability, I like to think of it as two different things that you want to think about with respect to your particular business. So number one, what industry are you in, and is it risky? Okay, so like Gina and I selling sunglasses, it's like in between risky. It's like not that risky, but you're kind of in the consumer goods area where like you could sell it to someone and like a kid could swallow it or something, and that could prove truthfully to be like an issue. So it's not super low, but it maybe is moving towards something a bit higher where I might incorporate. But what I have here, our design team put together like a tidal wave of risk. And on the low end, we have low risk, which I have like marketing consultant or like social media manager. And imagine you do that for a number of companies. Your risk profile will be quite low. Okay. And if you move up the wave, you get more risky. So on the other side of things, we got home renovation, moving services, consumer goods. These are all things that I would consider quite high risk. And I really wouldn't operate any of these before I incorporated. Okay. So really, you just need to figure out your industry and to the best of your ability, judge, is it a high risk, low risk, medium risk? And then it's up to you to make the decision as to whether or not you then want to incorporate to protect yourself. Like we've got 50 people on the call today-ish, 44. I'm happy it's 44 because we started with 44, which means no one's left yet. So that's good. So we're not going to go through 44 businesses today to decide like, you know, the risk profile of each of them, but use this as a gauge to decide whether or not you're in a high risk industry and whether or not you should incorporate. The second layer of risk, I like to think about it in terms of operations. A simple operations with low risk is it's just you or your business partners operating the business. So if it's just Gina and I, and we're running a sunglasses company, maybe we're going to hold off a little bit and then incorporate. But if Gina and I actually have 4 employees, by virtue of having an employee, your risk profile increases where I would incorporate. Okay. Great. Benjamin has a question. Would you consider a game development company a high risk operation or low risk? It depends on the game. It's also software. So I want to protect the intellectual property involved. I'd probably incorporate it. I'm not going to go through, like, I don't want to go through everyone's company today. We don't have time, but that just gives you an idea of what I'm thinking about, right? Like this one's a little bit unique because there's intellectual property involved, and you probably want to secure that within the corporation as well. Next, taxes. Oh, this is a really good question, and I'm going to answer Steve's question before we get to taxes. Okay, if I just start with the sole proprietorship as the business, do I have the ability to change to incorporation without too much hassle, let's say? The answer is yes, but I want to explain what that means to everyone, because this is a really crucial concept. And you're all realizing how we're going to run out of time already. We're not going to get everything done. Sole proprietorship to imagine incorporation, or partnership to incorporation. So first of all, we all have the understanding that when you're a sole proprietorship or a partnership, there's nothing new. So anything you create as part of your sole proprietorship, it's yours. And this ties in actually really well with the taxes that we're going to talk about, okay? So if if the sole proprietorship makes $50,000 in profit, that's just in your bank account. You can do whatever you want with it. Now, let's say you then want to go ahead and incorporate, and it's the same business. That $50,000 does not just flow into the corporation. These are two distinct entities, and you cannot just move money from one to the other. When you incorporate, you are starting fresh. Okay, now you could hypothetically carry over the name, and you could hypothetically carry over some contracts, but it's not like, oh, I want to incorporate, so everything I have is just now part of the corporation. And I think this is best understood with an example, which is, I like to use landscaping. Imagine I've started a landscaping company and I'm a sole proprietorship. And I start out and I buy like a lawnmower, keeping it simple. And then I keep on getting more clients. And I ended up buying a truck and I got 2 lawnmowers and all the rest. And this stuff I've purchased is worth $100,000 as part of my sole proprietorship. Wonderful. And then I realize I'm a little bit higher liability and my accountant is telling me to incorporate. So I want to incorporate. Great. I cannot just move those assets, the truck, all the rest into the corporation without a tax event happening. So if I want to move that $100,000 worth of goods from my sole proprietorship into my corporation, I have to do what's called a Section 85 rollover. Sounds complicated. It happens all the time. But what it means is you won't be able to use an incorporation product like owner. You will almost 100% of the time need to work with an accountant and a lawyer to make sure that transfer of assets happens, because in exchange, you switch over shares. And there's a whole bunch of other paperwork that needs to happen. So the takeaway is, if you're a sole proprietorship and you get a lot of assets or property as you operate the sole proprietorship that you want to move into the corporation, then the corporation process can still be done, but it's just a little more complicated and costly. So where you might have been able to do it for $500 with owner, now you're probably looking at $2,500 because you have to hire a lawyer and an accountant. Now, don't stress, like if you have $100,000 of equipment, $2,500 to incorporate is not going to blow the bank, right? Like things are going well. So it's all kind of like a natural progression, but just realize that things get a little more complicated when you're doing very well as a sole proprietorship. And it's another reason to perhaps incorporate a little earlier on. Sorry for the long-winded answer, but it's important to understand that. Hannah has a great question with freelancers. I would not consider contractors or freelancers the equivalent to having an employee. Great question, but it doesn't, in my opinion, increase the risk profile at all. So, okay, taxes. Let's do taxes now. So I guess I'll put a caveat that I'm not an accountant. I like to explain taxes because I've had to understand it as an entrepreneur. And I think it's really important to understand how taxes work while you're considering what business entity you want to operate your business under, and just going forward how it works. Okay, so let's start with a sole proprietorship. Let's say I'm running the sunglasses company, and let's say at the end of the year, I have made in profit $100,000. So revenue minus expenses, I got $100,000 that's sitting in my bank account. Okay, so sole proprietorship, what do we know? We know it's not a separate legal entity, and we know that I have to file my own personal taxes. So what happens? $100,000 in profit, that's all taxable income. It's taxed at the graduated personal income tax rate, and you have no option. Okay, so I don't know what the tax rate is. You have $100,000, let's say it's 42%. You made $100,000 and you're now giving 42% to the CRA. And you have no choice in that process whatsoever. Okay, pretty easy, but you paid a lot of taxes. Let's use the exact same example. And now Gina and I have created our sunglasses company and we made $100,000 in profit. Great. So remember, Corporation is a separate legal entity, and that separate legal entity has its own bank account. So that $100,000 is now sitting in the corporation's bank account as profit, and we're filing our taxes, and we give it to the government, and we say we made $100,000. Corporations are taxed at, I'm going to get the numbers wrong, but approximately 15%. Okay, so you can automatically see the difference right off the hopper. $100,000 less 15,000 on the corporation side is I'm left with $85,000, but on the sole proprietorship, I'm only left with $58,000. But there's a difference. On the sole proprietorship side, that $58,000 I can immediately use for personal expenses. I can pay rent with it. I can buy a computer with it. I can buy groceries with it, whatever I want. On the corporation side of things, if I want to use it personally, I have to draw out the money from the corporation's bank account to my own personal bank account. There's two ways to do that. One way is to be an employee of your own corporation, so you get taxed again. The second way is you can pay yourself a dividend as a result of being an owner of the company. You will also get taxed on that. If you were to take all of the money out of the corporation's bank account and put it in your own bank account, you will pay effectively the exact same tax rate as if you were a sole proprietorship, and there is zero tax benefit between the two. Where you get a tax benefit is if you don't need to take all the money out. I already showed you all how much tax benefit I get if I don't take any money out. I'm only paying $15,000 of taxes if I don't have to touch that money. Whereas in the sole proprietorship example, I'm paying $42,000. So you get a tax benefit in a corporation when you don't have to draw all of the money out, and you can leave the money in the corporation or some portion of it for next year's marketing expenses, for buying more inventory, for growing the company, etc. But if you have to take all of the money out for your personal use, there is no tax benefit between the two. That's part one. Okay, I hope people generally understand it. It's a little complicated, but I think the examples sometimes help. Part two, capital gains exemption. I used to never talk about this, but I think it's important to realize that there's a relatively big carrot at the end of incorporating. So what is a capital gain? A capital gain is the difference between the value of an asset when you start and the value of it when you sell it. So when you incorporate a new company, you have to set a nominal amount in terms of its value. At owner, we default, unless you change it, to a nominal value of the corporation at $10. So if Gina and I were to incorporate on owner tonight, after we're done here, the value of the corporation would be set at $10, and there's paperwork and legal work that our system does automatically to reflect that. And then let's say Gina and we sell the company in 4 years' time for $1 million. Wow, good stuff, okay? Now, the difference here is we started at $10 and we sold it for $1 million. That difference is the capital gain, right? Great. Understand that. So capital gains in Canada are taxed at effectively 25%, which means Gina and we sell the company for $1 million, but we have to give the government $250,000. Now, the way capital gains work is each of us, as being Canadians, Canadian residents, we get a capital gains exemption, a personal capital gains exemption, up to approximately $850,000. Which means if Gina gets $500,000 of that sale and I get $500,000 from that sale, both of us could hypothetically take advantage of our capital gains exemption and pay zero in taxes. So I just provided an example where we saved $250,000, and it's not that crazy of an example. And the reason it happened is because a few things. You incorporated the right way with the paperwork, and you held the shares as owners for, I think it's 3 years, but it might be 2 years. I think it's 3 years. Gurpreet, great question. Is the exemption every year? No, it's not, and I wish it was. It's once in a lifetime, but it's a lifetime. Like it's not like you only have one chance to use it. You can, like in our example, Gina would have used 500,000 and I would have used 500,000, and we still would have had $350,000 left for some other business we started. Okay, so it's a pretty big carrot. It's good to understand. The other thing to keep in mind is the law can change, or the Income Tax Act can change. Like this has been the case for the last 40 years, but we might get a government at some point that gets rid of the capital gains exemption. But so far, so good. Zara has a great question. What are capital gains again? Capital gains are quite literally the gain. You start at $10, you sell at whatever, that is the gain. The capital in this instance is the corporation, or the value of the corporation. Okay, so lots of stuff we're covering here. Yeah, I'm not going through every example of capital gains, Gurpreet, because I don't know all of them. And it doesn't happen for stock gains. It's not just like general public company stock gains. Hannah, yes, so you get the most benefit from this if you incorporate before the company is worth a lot. Absolutely. Great question. Okay, so how are we doing for questions? How are we feeling? We're all experts at corporations now. Okay, we're gonna now get into a few things. I can tell almost without hesitation that we're not gonna cover intellectual property tonight. So what we're gonna do is we're gonna go over some of the logistics of incorporation right now, and then Gina's gonna show us like what it means to incorporate using owner, and like visually, I think it's really good to understand how easy it is, okay? So I think I put something before. Stephanie, you might have been looking forward to intellectual property and copyrights, but really you're not missing much because I'm not an intellectual property lawyer. So I'm just like, you'll gain just as much reading Wikipedia on it, to tell you the truth. But I'll cover it a little bit at the end. I'll stay an extra 5 minutes after we're done, so that's fine. Okay, incorporations. I mentioned a couple things that I want everyone to take away with. One of them is corporations are a separate legal entity. This slide, I want everyone to really understand. When you are looking to incorporate, it's a two-step process. Step one is registering with the government, and step two is like 50 pages of legal documents. The legal documents are required. All that benefit I talked about with the capital gain, you cannot get unless you do step two. If you want to pay yourself dividends, you cannot do that without the documents in step two here. At owner, we do 1 and 2 together. You won't even notice, okay? But just going to the government, you will not get step 2 done. And it's a legal requirement, okay? So we don't want you to end up here with half an incorporation. In other words, if you don't do step 2, you don't have an owner of your company, even though you would have filed it with the government, okay? Okay, this is the last slide I want to go through, and then I'm going to pass it off to Gina. And really, Gina's going to go over the same things here, but like high level, what do you want to think about when you incorporate? Name, we've got a wonderful thing in terms of our name search tool that Gina will show us in a second. Share structure is the structure for shares, okay? Shares, remind yourself, are the units of ownership for a corporation. Okay, so share structure is done at the beginning when you incorporate in terms of the types of shares you can have. At owner, we default to 2 types of shares, a voting share class and a non-voting share class. And a shareholder is a perfect name because if we remind ourselves that a share is a unit of ownership, and I saw that Gurpreet asked about stocks. A stock and a share, they're synonyms for each other. Okay, so If you own a stock of Walt Disney, you own a share of Walt Disney. And when you incorporate, you're going to have your own shares. Okay, so you are a shareholder, you are a owner of the company. And then the shareholders appoint the directors. The directors sign certain documents, or are considered like the board of directors, the mind of the corporation, and the directors then appoint the officers, which are like the president and secretary, treasurer, vice president, CEO, etc. Well, Derek, what happens if it's just me? Well, that means you're the only shareholder and you're the only director and you're the only officer. And that is totally normal. Most companies in Canada are probably one-person companies. You do not need to be more than one person to incorporate. The reason to incorporate, remember, the reason to incorporate is you create the separate legal entity and you get the liability benefits and you get the tax benefits. So with that, I'm going to stop sharing my screen because you've heard me enough. And I'm going to pass it over to Gina to show us a little bit of how Ownr works.
All righty, let's do this. Give me 1 second here. Are you able to see my screen?
Not yet.
Okay, give me 1 sec. I think now we got it going.
There we go.
All righty. Let's get rid of this. I feel like it wouldn't be a complete day if there wasn't one tech issue or another.
Of course.
But so happy to share our platform with you all. In addition to being at Ownr, I'm also an entrepreneur like many of you. And I am on the platform and wish that I had discovered Ownr long before I started my business. So today what I'm going to do is I'm going to give you an overview of how simple it is to incorporate with us. So we'll start off here. As soon as you sign in and get going and start incorporating your new business, you'll land on this page here, account information. This is related to your Ownr account. So your phone number, your street address, and it's as simple as clicking next. And then your corporate information. So this is really where we get in the meat of it. So federal or provincial incorporation in Ontario, your company head office, the industry that you're operating in, and your fiscal year end date. Something that I want to call out about our system that's fantastic is if you hover over the question mark, it'll actually link you to help articles that we've written, Derek, explaining what an industry is, what is a fiscal year end date, and what do most entrepreneurs do in those situations. Our next area here will take you into the name confirmation. What's really, really cool about Ownr is, let's say you're thinking of a name to use for your business. Our platform actually searches the government database to see two things. One, is this name already taken? And two, if it's not already taken, are there similar names? And if there are similar names, we caution you, perhaps you want to change your name to something a bit more distinctive and descriptive. So our database will do that. If you've registered your sole proprietorship, you've got your Nuance name reservation, you'll actually get a warning here saying that the name's already taken. What you can do on our platform is just upload your Nuance report or complete a business under this name document just to verify that it's your business name and proceed as so on our platform. So this bakery and latte for my cafe I'm opening, no one has it. So I can proceed knowing that I should be good to go when it's time for the government to review. Directors and officers. So two options. Are you managing by yourself or are you operating with others? So I'm going to say with others for this example, and then specifying if there's owners, managers, or owners and managers. So I'm going to select owners here, and then I'm going to go straight to my directors. So you see here, I'm the only director listed, but what I'm able to do on our platform is add in new directors. And it's as simple as adding their first, their last name, their email, and their phone number. And what will happen here is as you go on to incorporate, they'll be notified via email of the process. And when it comes time to sign off on your bylaws and your resolutions, they'll get notified as well to do so. And then officers as well and president, I'm gonna add somebody else. I'll probably likely add my business partner here. And again, you can add their information in this section here. Derek spoke about our share and share class section. So here it is. I wanna actually switch to advanced mode quickly, just to show you that we also provide you with the platform to add classes. So if you wanna add specific classes here, selecting this toggle, you can actually edit the class properties. So specifying common, preferred, special, custom shares. Down here, voting, non-voting, votes per share. So we really make it as simple as we possibly can for you to go in and fill in that appropriate information. So back to simple mode. And I'm likely gonna add that director who I added previous in this area here. And then we divide it up as voting, 50 and 50%. And then you land on our plan. So to call outs, we have a code for you to use to get a discount off, which will be shared after the presentation. And we also have an offer going with RBC. I just want to share with you here. There we go. And you can actually initiate the process right on our platform. So as soon as you select a plan there, something I'll also highlight is our sales team, myself and my colleagues are available to meet with each of you one-on-one to go over what each plan entails and help you decide which is right for you when starting off your incorporation. After you select your plans, your nuance report, we give you the capability of opening up your business account right on our platform. And if you're unsure about which plan's right for you, we've actually added a quiz there so that can take you through that process. And then the next steps after that would be to set up an in-person account, a meeting with a financial advisor to set up that account in person. The most important step on our platform is this final review area here. And what we've done is give you one more chance to review all the information that you've input here before you sign off and submit, because as soon as you hit submit there and you provide your signature, it gets sent off to the government. What I wanna also do is show you what an incorporated company looks like on our platform. So you can see here that I'm making some changes. I'm on our managed corporation plan. So I've added Kelly as an employee. I've issued some shares to Jane, and I've added Kelly again as a contractor. Here's our business setup list that I have going on, my recent activity, and some crucial information here. So my business number, my corporate number. Over here on owner, I can also get our GST, HST added. So I'm gonna go in and do that. Here's our minute book. And then all my documentation, and our platform actually gives you the ability to upload existing documentation that you may have on your computer, but you want to keep in one centralized place. So we give you that ability to do so here. And then that share structure that I set up, here's my cap table and my insurances as well. So I know that's a fairly quick overview in the interest of time, but like I mentioned, my colleagues and I are more than happy to deep dive further into every area with you and go over those plans as well. I'm gonna give it back to Derek to go through the next steps after incorporating and what that looks like for you all.
Thanks so much, Gina. I think that's worth highlighting is at Owner, we've got a team of about 75 people, and all we do all day long is like talk to entrepreneurs, build software to help entrepreneurs. We have design teams that do this. So we're solely focused on really getting your business off the ground and running. So I'm going to go ahead and share my screen again and finish up. Wonderful. Wasn't that great to just see how it all looks? I think it's really nice to incorporate and then actually visually experience what the incorporation is and have everything kind of saved there. Okay, so we're doing pretty good for time. We're at 7:11. Let's do steps after incorporation. So I think this is like what you should be thinking about after you incorporate, like what do the next 30 days look like? Okay, so the first thing, and this is, speaking from experience, first of all, if you incorporate, you are legally required to have a separate new bank account associated with that corporation. So that's step one. If you decide to do a sole proprietorship, there is still tremendous benefit in opening up a new bank account under the sole proprietorship to just keep expenses and money coming in separate from your regular day-to-day. So would recommend doing that. The other thing I would highly recommend is when you're in the process of opening up a bank account, make sure that you go ahead and set up a credit card, because as you know, most of your expenses will be done online. You're going to need a credit card to make any of those purchases. So it just keeps things super simple in terms of one set of banking records for your business. The second piece here I have is pay for your shares. This ties back to the capital gains discussion. This ties back to the legal documentation in terms of step 2. You're going to have documents that set out how much each shareholder owes. And what happens is each shareholder will actually pay money from your personal bank account into the new corporation's bank account to reflect the payment of shares. Okay. And then the last thing that we want to think about is consider registering for HST. And I have payroll and import and export numbers here. Let's dive a little bit into HST quickly, or if there's people outside of Ontario, GST. So the magic number as it relates to HST GST is $30,000. So what does that mean? It means that in the previous 12 months, if your business has generated $30,000 of revenue, or not or more, $30,000 is actually the limit, you are legally obligated to register for an HST number and then start charging your clients HST. Okay. This requirement exists for incorporations, and it exists for sole proprietorships, and it exists for partnerships. It is not exclusive to corporations. Okay. Now, the second thing to keep in mind is, although there's that $30,000 limit in terms of when you're required to register, some people choose to register much earlier on because of tax credits. And what I think it's good to give an example here. Imagine I'm opening up a restaurant. And imagine I'm not going to serve the first meal until January 1st, 2023. So in my head, I'm thinking, well, I'm not going to get close to this $30,000 number until next year. So I don't need to register for HST. But in the meantime, I'm buying tables, chairs, I'm outfitting my new restaurant space, and I'm spending $100,000 on it. If I registered for HST early, that would mean that the $100,000 I spent, I would have spent $13,000 extra on HST, and I can essentially claim that entire $13,000 back. And if I made no revenue, at the end of the year, I would tell the government by HST form, how much money did you make? $0. How much money did you spend? $113,000. How much of it was HST? $13,000. And then I would submit it to the government, and the government would send me a check back for $13,000. So that's how tax credits work in this instance. Couple great questions coming in. Daniel, if I already have an HST for sole proprietorship, do I need a new HST for a corporation? Yes, you do. Adele, Say you've incorporated and have some people contributing for a small contract fee. How to ensure contractors do not get intellectual property rights? I'm sorry, Adele, but that's just too particular to get into today. So I'll just put a pin on that one. Hannah has a question. It's $30,000 in revenue, not profit. Okay, it's not profit. And we've got a couple other questions here around when to charge HST. So you're correct, you don't charge US clients HST. It's for Canadian clients. And two, there are certain things where you don't charge HST for. When you go to the grocery store, the majority of your bill will not have HST in it because grocery items are not taxable goods. Okay, so all of that really important to understand. Now, we might actually have time for intellectual property before we get to the resources section and questions. Eric, how are we doing for time? Like, do we have to 7:30? Is that the goal?
Yes, yeah, so feel free to take it wherever you go.
Sweet, okay. Intellectual property. So this is me, again, speaking as an entrepreneur, not as having any particular experience, although I have filed trademarks for my own companies. I'm not an intellectual property lawyer. First thing, I'm going to talk about two pieces. I'm going to talk about copyright, and then I'll talk about trademarks. Copyright. I see some of you, because not very many of you had your cameras on, which is totally fine, but I feel like Natasha's taking a lot of notes, maybe. That's great. So that's a perfect example. So Natasha's taking a bunch of notes, and just by virtue of you authoring those notes now, you are the copyright holder of those notes. So what does that mean? Well, because you automatically get copyright in those notes, you now can choose what you want to do with it. You could sell them. You could publish them. You can reproduce them. Everything that's involved with this definition here. But I think that's a good example because it showcases how copyright works. It's automatic, and the author of the copyright gets to do whatever they want with it. Okay. Now, copyright is ubiquitous. Copyright exists. If you hire a contractor to write a blog article, you've got to think about copyright because the contractor is by default the copyright holder of the article. And unless the contract assigns or licenses or transfers the copyright over to you, you're not going to get the copyright of it, and that's a problem. And this kind of ties into Adele, and I said I wasn't going to answer your question, but I kind of am right now, right? How do you make sure that you're getting the intellectual property when you hire someone? Through a contract that talks about intellectual property, that talks about the copyright being assigned to you. This can even exist with software developers. Okay, copyright is ubiquitous, it's automatic, and you have to think about transferring it over to you as a business. That's the takeaway here. Okay, good stuff. And I just talked about all that already. Trademarks. So, completely separate. Some people get trademarks and copyright mixed up. I gave a good example with copyright already, but copyright, again, can be notes you're taking, it can be a song you write, it can be a book you write, it can be software code you develop. Trademark now. So a trademark is related to brands. So what do I have that has a trademark on it here? I don't have really good ones here. I have two things. Okay, I have an iPhone here, and I have a little apple that you can all see on the back. And what does that mean? Well, this apple is the mark. When we're talking about a trademark, this apple is the mark. And Apple has gone ahead and registered this logo in terms of a trademark. And what does that mean? It means Apple and only Apple can use that symbol. Now, I think it's good to understand why. Well, it's because when we look at that symbol, we think it's an Apple product. And Apple has built a certain amount of brand trust that we're willing to pay arguably more for. So it identifies the products. So if someone else were to use that logo, it would be confusing to the consumer because we would think that it's someone else's brand. This is a very poor example, but I've got an old pack of gum on my desk as well with Excel. And I'm sure Excel has registered the trademark. And here it's probably two trademarks. One is the word Excel, and two is probably that sort of awful typeface logo as well. So there's two separate trademarks there. And I think this is a good example as well, because in this one with the Apple, when you register a trademark, it's always tied to products or services. So here it would have been for technology and telephones, and here it would have been for chewing gum, right? A couple other things to keep in mind with trademarks is they're country specific, and they're the opposite of copyright in that they're not automatic. If you want a trademark, you have to register with the appropriate intellectual property office in the country that you're intending to sell it. And it costs a fair bit of money. If you were to register a Canadian trademark, I don't know, I think the filing fees alone are like $500, and you're probably going to need to work with someone. Now, we have a partner actually on Owner, and I'm going to talk about one of the benefits of Owner in a second, but one of our partners called, they keep on changing their name, so I'm forgetting it. I think it's Heirloom. No, it's not called Heirloom anymore. It's called something else. I'll remember in a second. But they offer, Heirloom, thank you, Taryn. We didn't even talk about Taryn. Taryn's on the team. She's on the audience here. She's the one who set all of this up, and now you're just getting to see her on the chat function. And that's it. But shout out to Taryn for all the hard work. So Hailu does trademarks, and you get 20% off Hailu when you sign up for Owner as well. So last thing to remind yourself about trademarks is each thing that you get trademarked is a separate registration fee. So again, we'll use that example. Let's imagine, I don't know, is this Wrigley's gum or something like that? Yeah. Wrigley's is the actual company. So if Wrigley's registering this trademark, they're probably registering the name Excel. And that's one trademark that costs the whole fee. And then they're probably also registering this logo, which is a whole separate fee. And they're doing that for every country they operate in. Trademarks can be logos, they can be names, they can be sounds, they can be colors. That sounds crazy, Garrett. Well, it's not that crazy. If you think about a good example for colors is Starbucks. If you saw a cafe with the Starbucks green, as a consumer, you would be confused into thinking it was a Starbucks. So really, it's fair that they get it. Or a sound, when you open up an Apple, like when you open up your MacBook and it makes that sound, Apple has trademarked that sound. And again, if you opened up a different computer and it made the exact same sound, you would be confused into thinking it's an Apple. That's why they get it, right? So I'm so happy. We did everything we wanted to cover today, and it's 7:25, and we've got time for questions, and we've got time to talk about all the wonderful things we can offer you at Owner. So it's like we've done this before or something. First of all, you can find us at owner.co, owner.co. Okay, we don't have the .com. It costs too much money. 2, we've got a wonderful promo code here, 20% off, capital EDGE 20. Just keep in mind that it's off of the owner fee and not the government fees. So like with an incorporation's $500, 200 of that $500 is quite literally a government fee that there's never a discount on, it's just the fee. And there's actually a name search fee that we don't charge you for, but the $300 is where you get the 20% off. Okay, and the same thing goes for sole proprietorship. You get discount on that too. I think it's $80 or $89 for a sole proprietorship. Number 2, we've got a lot of resources that are great. We've got webinars like today. We've got blogs. We've got a new newsletter that we just released maybe 4 months ago. That's really great. One of our team members owns that. So sign up. You'll love it. Owner perks. So this is the thing that I was talking about with Hailu, and we've got perks with Staples, Hailu, QuickBooks, Xero, Etsy, TELUS, all these other things. And apparently it's worth $15,000. We take advantage of all of them. I don't know. I don't know if anyone that has, but if you need a service, we probably have a discount code for you to take advantage of a particular thing. Okay. And the last thing, which is really wonderful, is this RBC money back offer. Gina wonderfully went through part of the process of opening your bank account on Owner. But if you incorporate, you choose RBC as your bank account, we will deposit $300 in that new RBC bank account once it's all done. So it's great. And with a sole proprietorship, you get all of your money back into the new bank account. So we are at 7:27. We have one question I didn't answer yet. Stephanie. Okay, how does it work with regards to intellectual property if you are basing your business off the research published by someone? So this is a little bit complicated. This is like second year law, so-ish. A couple things here. So what we're talking about here, if it's research, is copyright. So we went over that already. And if it's research that someone else published, there's a couple of different things relate that. There's like an education section to copyright and intellectual property law, which makes you allowed to make use of it. If it's for a business, then you actually have to check up how the copyright works with that particular work that you're looking to leverage. Okay. Yeah, if it's being used, so I would look into it, but there is like an education fair use component of copyright law as it relates to that. I'm just the wrong person to be going into the depths of copyright law because it's not my specialty, for sure. Okay, but there is a fair use provision when it comes to copyright generally, and I think education might fall under that. Can a sole proprietorship partnership purchase a corporated business, say a coffee outlet or vice versa? Yep, I can do that for sure. I'm going to stop sharing my screen. Okay, so couple last things. Where are we at for people? We have 38, so we only lost like 5 people throughout this. That's pretty good. I'm pretty happy. It's like a Thursday after evening. People are looking outside, wanting to go outside for a walk. I think just on behalf of Taryn, myself, and Gina, we want to thank all of you for taking the last hour and a half and spending it with us. You're speaking to 3, like all of us work at Owner, but myself, Gina, and Taryn, we all have or have had our own separate businesses. We are all entrepreneurs. We know how wonderful it is. We know also how difficult it can be. So we are literally here, and we've been through it before, where you're here to help. I just want to thank all of you for pursuing kind of your dream when it comes to entrepreneurship. The Canadian economy is the backbone is entrepreneurship and small businesses. And we are here to support. We wish you all the best with it. Doing classes and webinars like this are ways to level up and take you to the next step. So wishing you all the best. And I'm thrilled that we hit time perfectly. So I'll maybe pass it to the Sheridan Edge team and see if there's anything else that we need to cover. I think we're pretty good. How are we doing?
Besima, you were muted. I don't know if you were saying something.
No, sorry, I was talking to Marisol, but no, thank you so much, Derek, Gina, and Taryn, if Taryn's still here. But thank you all. Thank you, Owner, for a great session. And I'm glad to see the amount of participation and questions that was happening in the chat. And hopefully we'll do it again soon.
Absolutely. I'm sure we will. I think there was 100 people on this list. There was 100 people already in a wait list. And I think that's even larger now. So we just need to make it a few hundred people next time. It'll be fun.
Yeah.
Yeah. Awesome. Well, enjoy the end of your week, everyone. Good luck with all of your businesses. And when you're ready, we can help you at Owner. So
Thank you for the Edge discount. Appreciate it.
Absolutely.
And thanks to everyone for attending, and hopefully we'll see you in another Edge event happening soon.
Yeah, those look great. The grant writing ones. Take advantage of grants.